baby. Earnings kicking off with a banger here. We're talking about Tesla. This fantastic week started off on a strong note so far. It seems with some good after-hour performance by Tesla here. Up around 1%, was up a little bit higher. It's fallen a little bit, but overall, this is a good earnings that'll kind of set the tone for how the market's going to treat us over the next week as we have some huge big tech earnings coming up over the next couple days, which I'm very, very bullish about. I feel like we're going to get some fantastic numbers off some pretty softball type estimates. Most commonly used phrase by me right now, softball estimates. Is that rude? I don't know. I don't think it is because, talk about hitting the fences like 150 feet out. So, anyone can hit a dinger over that, should be at least. So, hopefully Tesla's able to do that here. So, let's take a look at these earnings. See what's going on. Q2 non-GAAP EPS coming in at $1.45. Beats by 47 cents. It's not a very nice number, and a GAAP EPS of $1.02 beats by 47 cents as well. Not a shocker at all on this aspect. Really something that I had mentioned when talking about the potential of those earnings. What I expected definitely cheaper cost and vehicle margin to be a little bit better. One thing that they couldn't really predict necessarily is the sustained prices really due to the supply chain last year, and that really had an impact. So it really made it hard for analysts to give a good estimate here, in my opinion. So I think that's where you see a pretty good beat from. Really nearly twice of what was expected of them. I think it was because they weren't quite ready for the recovery yet, and I think there were some expectations that there'd still be some lingering supply chain constraints that led to a worse EPS line here. I'm not shocked at all that they were able to beat by a large number. I expected them to easily take the estimate that they had there, at least, if you do recall that, but I'm not shocked by this. We see a revenue line here of really right around $12 billion, 11.96. It's up 98% year over year. That's a significant number. It's a beat by 560 million. This isn't a shocker at all. Again, they kind of pretty much tell you the road. They give you the road map really early ahead of time. They announced, obviously, the production and delivery numbers for the quarter. July 2nd, I believe, is when they came out with that report. So I'm not at all shocked that they were able to post up an absolute smasher like this. Based off those delivery numbers, we could see the estimates clearly weren't foretelling, what was actually here to come. So, very good quarter for them so far. And one thing that'll, be relatively interesting to find out with these earnings. We'll have to know what guidance looks like because they didn't necessarily initialize it in their first little release here. So typically the stock might be up a little bit higher because of this, but you do have to consider year-to-date stock's down 10%, which is pretty crazy for Tesla. Performance has been weak this year, but if you look over the last year, up 100+% when you look a year out. So all things considered, and 1,300 over the last 5 years, not a shocker that we've seen some slowdown in this stock, and I really saw that coming. I think anyone really could have. Really, a stock can't stay super hot forever. It just doesn't exist that way. So it's really reached its slowdown period, which is this year, and really a lot of these big name or really big hype EV stocks, as well as just alternate energy and renewable energy sources, these stocks have been hit pretty hard this year. So there's a pretty big uphill battle for them to fight right now to keep this stock going upward. Automotive gross margin came in at 28.4 versus a 26 consensus. Again, I think it was hard for that consensus to even exist because we weren't quite sure what the supply chain looked like. So not too bad at all. Someone typoed, put a plus there for some reason. Don't know why. Capital expenditure came in higher than expected. 100, or not really what I was saying at all, but 1.5 billo. It's my new term, I say. So I say billo now instead of billion. It's kind of a thing. It's catching on around here. So I'm sure soon Elon will be talking like that too. Billow. He's quite a billionaire versus a 1.19 consensus. So more capital expenditure, and I think there's a lot of reasons for that. I think expansion is definitely a big part of that. We're talking about the Germany Gigafactory, obviously a big portion of that in spend. And one thing I think they'll mention here is the payments from crypto are definitely going to be something that cost them a lot of capital expenditure in the future, because as we get more regulatory, really regulation on cryptocurrencies, you're going to see these businesses that are accepting it, which likely will turn away from it, because it'll probably be more costly for them as opposed to just getting cold hard cashish. Operating income increased year over year mainly due to volume growth and cost reduction, as I mentioned there. Positive impacts were partially offset by growth in operating expenses. Includes increased SBC, Model S and X ramp, obviously producing more, additional supply chain costs, lower regulatory credit revenue, and Bitcoin-related impairment of $23 million, and other items. Actually not that crazy in terms of expenses there, but again, I don't know how many, I don't know necessarily how many people purchased vehicles with Bitcoin, to know what that value looks like, or purchased any product from Tesla. So they don't really do press releases super well. Typically from Tesla, you don't get a press release, you get a 10Q, which obviously hasn't yet to be released yet for the quarter, but we do have a slide deck to look at too, and look at all these beauties. We're going to take a quick brief, can I scroll? I can scroll. A quick brief through the slide deck, let you know what I'm feeling here. So, operating cash flow less capex came in at $619 million for Q2. Good to see a good positive number there, headed in the right direction for them. Net debt and finance lease repayments came in at $1.6 billion. We'll look at the balance sheet later for sure. There was a $912 million decrease in the cash and cash equivalents in Q2, which we'll look at the balance sheet again too, because I believe that's probably due to some expenses made. Overall, I doubt it. I really doubt that their balance sheet lost equity. I'm going to assume they probably paid off some debt. This company's got a decent bit of debt, just due to really capital raises. So profitability, $1.1 billion in GAAP net income. I like to see that. GAAP net income is what I look at, mostly because it's a fair trading ground where you can see every company from a GAAP standpoint. It's a good way to compare companies' businesses, really. It's how you compare what they're doing, because on a non-GAAP standpoint, they can fudge the numbers and exclude certain things, whereas GAAP is consistent around the board. So definitely one thing I like to look at. But yeah, good to see that actually for them, company that hasn't been profitable, for years and years, and now they're actually turning the corner, and vehicle margins gone to the positive, and things are looking pretty decent for them. Record vehicle production and deliveries in Q2. You'd expect that every single quarter, ideally, because it's a successful sign of a growing business. They launched that. That's cool. They started delivering the new Model S to customers too. See if that gets people excited. Here's a nice financial summary of them. You see obviously Q2 on the far right here. And year-over-year growth, 97%. But you see how this revenue has been consistently growing over the last year. Good to see that. Total revenues still consistent growth. Q4 a little bit higher than Q1, which isn't a shocker. People spend a lot more in quarter fours for these companies. Just in general, around that December time period, people just spend a lot more money. You'll see retail spend is up significantly during that time period. It goes for automotive too. You wouldn't expect people to buy vehicles for Christmas presents, but some people are just that rich that they can do that. One day we'll get there, okay? Stick around, man. Stick around with this portfolio. We'll get there. I'm gonna be a millionaire one day, and you're gonna be ashamed that you laughed at me. You're gonna be ashamed. Free cash flow, $619 million. Definitely less than what they saw on a few quarters of last year, but still a 48% increase. And we're talking about year over year for Q2s. Good to see that. Production, similar number. We saw obviously no Model S's produced in Q1 because they're working on the new Model S now, which is being produced in Q2. And obviously deliveries quite low as well because they were selling through their original models they had. Now with the new models, we'll see what that looks like. I don't think it's going to be a huge win for them, but if you look at other companies, when NIO designed their ES8, it actually boosted sales quite a bit. So we'll see if they can redefine a new customer base with the Model S. I think the Model 3 is overall superior vehicle, but it's good for them to have. Obviously, they want more than two vehicles in the supply chain. Really. They want multiple vehicles on here, so that's nice to see. Solar deployed, not significant amounts here, nothing crazy. 200% growth year over year, but again, nothing significant to be mentioned for sure. But good year-over-year growth for sure. Store and service locations increased 34%, so more locations, more places for people to buy stuff. Mobile fleet, including taxis, which will be pretty good for them, obviously, too. Mobile taxis could be fantastic. And charger stations up 46%, and connectors up 49%. Good to see that because you need people to have accessibility to charge it if they want to purchase an electric vehicle. Yeah, makes sense. Here they talk about capacity with different stuff they're working on. Obviously, the Texas facility, which they're working on construction of the Model Y, huge stuff. And the Cybertruck is in development. See what that looks like when all is said and done, but could be huge for them. The Tesla Semi, not sure where they're going to be installing those, the Roadster, nor a quote-unquote future project. Curious what that looks like. If it's obviously it's a different vehicle. My assumption probably going to be an SUV type, but we'll see. We'll see what that looks like. And they talk about production and how that's booming in everywhere producing right now. Vehicle software, just a general idea of what the business is doing, and selling the business. That's what it's all about. Photos, we love seeing the photos of the Berlin Gigafactory. Look at the production. I mean, look at the difference here. This thing's ready to produce, baby. It's nearly ready. They're growing fast. The Texas Gigafactory working. They're working on it quick. They're ready to produce nearly. Look at these guys. They're just chilling on the roof. It's got to be about 9 million degrees on that roof in Texas. Tin roof, probably already 100 degrees. Pure sunlight. There's no shade at all. You can tell there's no clouds. These guys are literally dying to take this picture. I can't imagine it. These guys are raising their hands, not because they're excited to be in the picture, but because the sweat is pouring out so hard and fast. They have to. Otherwise, it's going to drip down their arms. Yeah, trust me. I know what it's like. Folks. You're going to tell me these construction workers are just chilling on this roof, tin roof. They're going to be dead. They're dead in a minute. I bet they all died of heat stroke at the start of that. They need a whole new construction crew after that. Good golly. Good charts here when you can see the net income line. Really growth from 2018, no doubt. The blue is what I really look at. Adjusted EBITDA, good to see too, but I like the net income line. I like to look at it. 2019 obviously was a little bit of a bum year. Year was bum year. But when you look trailing 12 months, you see a little bit better of a picture. You see a growth story. Double lift. You see why I use both hands, because there's two different bars. So if you get it right, maybe I deserve that one. I choked on my own freaking spit. I deserve that one. Financial statements. You're going to tell me right now that you're going to give me a balance sheet? You're going to give me a balance sheet to look at. Don't mind if I do. Okay, I can't zoom in too quick. I mean, it's we tried. We tried to zoom in. Let's just go to wow, that's just donging it. 20. If we look at 80% here, this is a good zoom. It's a quality zoom. I hope you appreciate this, because they give like quarter over quarter here, which is crazy stuff. But I like looking year over year. So we're looking far left column, far right column. That's what we're gonna do. Total Current assets used to be last year $15.3 billion. Now sitting at $24.7 billion due to pretty big increase in the cash position. Let's forget that happened. Don't get me angry. 38 below in the total assets line here is what we used to have last year. Now coming in at 55 below, looking pretty good. Good growth there. Again, most of it's due to a growth in current assets, but we also see some growth in property. No shocker. I should have new factories going up on a Tuesday, as they say. Current liabilities right now 16.3 compared to 12.2. There's growth there, obviously booming and that, but sometimes you got to raise debt a little bit to raise assets, and that's what I believe they've done there. But you look at total liabilities in general, only at 28.9 compared to 26.7. So we saw only a $2 billion growth there, while assets rose by around $18 billion. That's a totally blatantly wrong estimate. It's really 17 billion, but that's the thing about this. Sometimes you just talk out of your rear end. Overall we've seen pretty good stuff. Stockholder equity, I don't know why they don't highlight it. It's my favorite thing to look at on the balance sheet. I love it. And they didn't highlight it, but I'm struggling here. $9.8 billion below, is what it used to be a year ago. They've boomed that now. Boomed it to 24.8. If you look quarter over quarter, it's even grown too. But $24.8 billion compared to right around $10 billion. So significant growth in the balance sheet. I'm pretty impressed with this company, what they're able to do in terms of this growth. Now, what I hate here is the market cap. So we're talking about a company which trades after this P ratio is going to be around 600 still. Market cap after today, probably close to $640 billion if it opens up around this price. Yet the company had an annualized revenue last year of $31 billion. That is redonkulous valuation. We're talking about 20 times the revenue line. Now, I get why. It's because it's a fast growth company, and it's really on the forefront of technology right now. But that is why the stock has been stagnant this year. Just throwing it out there. That's why you've seen stagnation this year, because the valuation is just a little too steep for people. And there will come a time when competition comes into play that this stock will kind of lose that momentum continually as others get into the electric vehicle game. I mentioned this year is very critical for them because they need to be the first to develop a lot of these electric vehicle types. Again, that Cybertruck needs to come out fast, because if you wait to where Ford's going to bring out their, the Ford Lightning, traditional truck fans are just going to go with that. And again, the Cybertruck isn't necessarily for traditional truck fans, but they even fixed the model to where it was more like a traditional truck and rounded. I think they should have stuck with the market that was a little bit more odd. We want to own we're rich and we can own a Cybertruck that looks like a Halo 1 Warthog from a PS2 graphics. That doesn't make sense, but it's Xbox 360 graphics, I should have said. But what can I say? That wasn't even 360. Whoops. Sorry. But that's what I got for you today. I don't think this stock's in my opinion, I don't see it as a buy right now, because I believe for the next 6 months, this stock is going to be pretty stagnant. I really do. I think the stagnation will exist this entire year, mostly as the entire industry of these EVs kind of gets slowed down by things. So that's my opinion on the matter. Hope you enjoyed this. Let me know what you think of Tesla stock. I like the company, don't like the stock.